Yeah, it's nice to finally be talking on a day when silver is up, and it's been up for the last few weeks here. We're looking at our fourth consecutive green week in silver, which we haven't seen in a while. Where the last year or so, it seems like every time we talk, we've just been getting hammered. So it's kind of nice to see some green on the screen. As far as where we are now, I am confident the lows are in silver. I've said that before and I've been wrong, but I do think that's the case. And there's some reasoning behind that. But that doesn't mean we're not due for a short-term pullback. We're getting extended here on the shorter time frames, and a lot of kind of sentiment, and you're starting to see, like on Twitter, for example, when you start seeing the rocket ship emojis coming out again and all that, that's usually kind of like a short-term caution signal. But I do think I am pretty confident here that we've kind of turned the corner in silver and platinum as well. Gold, I think so too, but less confident about gold. Gold is a less favorable risk reward setup than silver and platinum to me right now.
I do find it interesting how, ever since I believe it was, last week, maybe Thursday, we saw that dip of silver below $19. And then it's really just been up from here with not much pullback. You say that, the sentiment out there, I mean, if you're just going off, based on what's on Twitter and everything like that, there is maybe a bit of overexcitement out there right now. Can you expand on that?
Yeah. So I like David Brady, who's on our team here. He came up with this framework to analyze markets. He called it FIPEST, F-I-P-E-S-T. And that's an acronym for fundamentals and market analysis, positioning on the COT, Elliott wave, sentiment, technicals, and then /M for manipulation. And the idea is that the more of those things that kind of align for a turn in the sector, the more confident you can be that a turn is happening. And almost all of those things are pointing to that we've seen a turn in silver. But like I said, it doesn't mean we go straight up. What was support becomes resistance. And in silver, I mean, it was major support there, right between 21.50 and 22. Just call it 22. Well, here we are coming right back up to $22 area. And that's going to be stiff resistance. I think we're going to punch through it. But often when you test a resistance level with the RSI extended above 70, it's pretty rare that you break right through it on the first attempt. So what often happens, you take a stab at it, $22, pull back, build some energy, work off some of that euphoric optimism, and then punch through it on the second or third time. That's kind of what I'm expecting.
And as for like a time frame here, you're saying kind of second or third time. So this could maybe play out in the next couple of weeks or months, or your perspective?
Yeah, weeks and months, not like quarters or anything like that.
Okay.
Yeah, and I'm talking about $22, by the way. I think we'll get through $22 in the coming weeks and months.
And we are seeing also, as I mentioned at the beginning of this interview, is the dollar index. Your perspective on that, because it seems like we did see quite a drawdown just this morning.
Yeah, and what I like about charts is they kind of they can remove your emotions, your emotional bias. You can just see the data and what it is. And I can share my screen here, but or I can just describe it to you. But yeah, the dollar had gotten extremely overbought in all time frames. That's no secret. Everyone knows about that 120 major resistance. We didn't quite get there. We got up to a peak about 115. And we lost the 50-day moving average. And you can draw an uptrend line going back to February of this year. So it's about eight or 9 months now. Perfect trend line. Every time we came back and back tested that, boom, it bounced. Well, just earlier this week, we lost that support. So to me, that means the path of least resistance is a pullback towards the rising 200-day moving average. And that would be a pretty significant pullback. That's around 104 on the dollar index. If that does materialize, by the time we get there, the dollar might be oversold and due for a bounce. And, to me, when price is above a rising 200-day moving average, it's still in an uptrend. So to lose that uptrend status, we would have to get below the 200-day moving average. And then for that 200-day moving average to begin to slope lower. And to the people who may think, it's a bunch of technical analysis, kind of gobbledygook, this matters. These are the things that matter to institutions, the trading algorithms that really drive these markets. That's a key input into those algorithms is where's price relative to that 200-day moving average? What's the slope of the 200-day? Have we made higher highs and higher lows? So we're starting to see the first cracks in the uptrend in the dollar, but it's still firmly locked in a long-term uptrend. So it would be premature to say, hey, the uptrend is over. But we're seeing some cracks in that uptrend.
Now, if we could see some of the charts maybe of the price points you're looking for on gold and silver so we can get a visual there. And I know we do have some viewers in the comments asking about platinum, so we'll get to that later. But yeah, definitely for all our viewers out there, put in the comments section on the side here, the live chat, any questions you have for Steve, and hopefully we'll be able to get them on air. But yeah, if right now we could maybe see some of the price points on gold and silver.
Sure. And just because we're talking about it, I've got the chart for the dollar up. Here's that uptrend line I was talking about. So we lost that. So let's pull up a chart for silver here. And whenever I look at charts, I like to go big to small. So let's start with the kind of longer term, several year chart of silver. This goes back to September of 2019. And you can see like I said, what was support becomes resistance. Right here was big support going back all the way to September of 2020. Held. Once we lost that, now we're coming up and testing it as resistance. On the weekly chart, we're not quite overbought, but when you zero in a little bit on the daily chart, you can see a confluence of resistance right here. Up here on the RSI, anything above that red line indicates overbought. So we're starting to get a little bit overbought here. And we're at a confluence of resistance. You can see this downtrend line right here, this red line. We've tapped that several times going back to March of this year. And here we are right at it now. And that red line coincides with the 200-day moving average here in yellow. So this is a key test right here, right now in silver. What I would kind of expect is maybe a little bit of backing and filling here. That seems to be the path of least resistance. Maybe kind of pull back. You've got the 50-day moving average, which is rising as support. And then on the second attempt, you punch through that 200-day. Now, could we just blast right through it now? Yeah. I mean, silver's like a beach ball just held underwater or a compressed spring. Choose your analogy. And it could just pop and keep going. I don't necessarily want to see that because these vertical moves tend to, fizzle out and they hurt the most number of retail participants. So I'd rather just see a nice healthy uptrend, higher highs, higher lows, and break through that 200-day on the second attempt.